welcome to a GuideWire Systems Integrator webinar presentation.
Hello, and welcome to this 10-minute overview on the J.D. Edwards balance sheet lessee accounting functionality. My name is Beth Rogel, and I am a financial consultant at GuideWire Systems Integrator. Today, we are going to review the new regulations, the possible options for complying with the regulations. We will review the J.D. Edwards solution, and last, we will go over some commonly asked questions. The International Accounting Standards Board and the Financial Accounting Standards Board came out with new accounting standards that require certain types of long-term leased assets to be accounted for on the balance sheet. The goal of these new standards is to increase transparency for investors and creditors. Companies used to be able to expense the lease payments, which made it hard to tell what the liability was on the company for those assets. There are a couple solutions to meet the requirements of the new regulations. The end result for both options is that the lease information needs to be recorded on the balance sheet. The first option would be to create a manual spreadsheet that would calculate the amortization schedules for each asset. Each calculation would then need to be entered into J.D. Edwards as a manual journal entry. The creation of the spreadsheets might not take very long, depending on the number of assets, but the management and monthly processing of the lease information would all be manual and very time-consuming. The second option is to use the J.D. Edwards solution. J.D. Edwards created an enhancement on the real estate module called Balance Sheet Lessee Accounting that can be used to create and manage all lease information. There is some upfront setup required in J.D. Edwards, like setting up AAIs and creating the leases in the system. However, once the initial setup is complete, the monthly processing and lease management is very straightforward. If you're already using J.D. Edwards, the clear choice here is to leverage your investment by using the new enhancement. This presentation was designed to overview the main processes involved with setting up and managing balance sheet lessee accounting in J.D. Edwards. We will start by reviewing the 4 steps in the setup section, and then finish by reviewing the 3 tasks in the processing section. Oracle has also created pre-delivered UX1 functionality for balance sheet lessee accounting, complete with watch lists, dashboards, and the springboard, which will take you to common tasks. This page makes it easy to manage by exception, meaning that this information can be used to alert you if something needs correction or seems out of place. The first step in the setup is configuring the real estate management constants. The lessee accounting section of the constants is used to activate the balance sheet lessee accounting functionality and to set default processing. The lease classification and reasonably certain to exercise options are defaults that will be assigned to the leases. The generate unit asset setting is used to automatically create a fixed asset record when a unit is created. The last setting, activate balance sheet accounting, will enable all of the new balance sheet lessee accounting functionality. Bill codes are used to define certain aspects of billing records related to the lease. There is a new section in the bill code setup called Lessee Accounting. These settings can be used to determine whether the bill code has an effect on the lease liability and whether the effect on the right of use asset is an initial direct cost, a lease incentive, a lease payment, or has no effect on the right of use asset. Some new accounts will need to be set up to accommodate the new functionality and to accurately meet the new reporting regulations. The following 2 slides show the typical accounts that will be used for operating leases and finance leases. The AAIs are set up for the new accounts, and journal entries are made to these accounts during the balance sheet lessee accounting process. Because each account used in the process is defined, this makes it easy to create reports and analyze balances for leases throughout the life of the lease. The next step in the setup is to create the property and non-property records. These are used as individual asset lines in the lease master records. Property assets require both a unit record in real estate and an asset record in fixed assets. On the left side of the slide in the unit master, is the unit master that is set up in real estate. The building is a business unit, the unit number is a specific piece of property, and the unit asset value is a fixed asset record that was created for the unit. The fixed asset record is on the right side of the screen. For non-property assets, only a fixed asset record will need to be set up. The fixed asset records are not run through depreciation in the fixed asset module, and no depreciation amounts are stored in the fixed asset tables. The next step is creating the lease. This screenshot is showing the lease master record. The tenant field is the address book record of the lessor. This is who payments will be made to. The terms of the lease are also entered here. In the grid, you can see there are two different assets assigned to the lease. In this case, there is a non-property asset of a copier and then a property asset for the office space. Each asset in the lease will have its own amortization schedules, but payments are grouped together for the lease. There is also the functionality to sublease. On the next slide, we'll go over the Lessee accounting tab shown in the header. On the Lessee accounting tab, the default lease classification and default borrowing rate can be set for the assets included in the lease. There is also an option to specify if the company is reasonably certain to exercise the purchase option on the leased asset after the lease term is over. These are all default settings and can be overridden at the individual line level in the lease. The last step in the setup is to define recurring and manual billing for the lease. Each asset assigned to a lease will need billing records. Recurring billing is used to determine the recurring lease payments like monthly payments. This screenshot shows an example of recurring billing for the assets that were assigned to the lease. Highlighted by the red square are the main fields required to calculate the lease payments. For example, the unit 3RW, which is the office rent, will generate a $10,000 voucher once a month from March 20 of 2020 to February 28 of 2025. Manual billing is used to record payments that take place before the lease begins, like a one-time management fee for leasing an office building. The manual billing entry looks a lot like entering a standard voucher in accounts payable. It is tied to the asset in the lease and can have an effect on the right-of-use asset amortization schedule. Defining billing finishes the setup required for balance sheet lessee accounting. Now, amortization schedules can be created, commencement journal entries can be created, and monthly processing can begin. After the leases are built and the assets and billing are assigned to the lease, amortization schedules can be created. There are two different amortization schedules that get created, a lease liability schedule and a right-of-use asset schedule. This first slide shows an example of a lease liability schedule for the office rental. Notice that the first line has a blank amortization schedule line value. This line stores the beginning balance for the lease liability schedule, which is the present value of all the lease payments. This should look like any other amortization schedule for the rest of the lines. All journal entries created through the life of the lease will be created based on the amortization schedules. The AAIs that were set up earlier will determine which accounts the journal entries are made to. This next slide shows an example of the right-of-use asset amortization schedule. The beginning balance is calculated the same as the beginning balance for the lease liability schedule, except it may take into account the manual payments that were made before the life of the lease began. Once the amortization schedules have been reviewed and approved, the commencement journal entries can be created. These initial entries use the beginning balance from the amortization schedule to create a debit entry for the right of use asset account and a credit entry to the lease liability account. Once the previously mentioned steps are completed, the management of the lease is handled by two monthly processes. The first process is running the recurring billing generation UBE, which creates accounts payable vouchers based on the recurring billing for the lease. The second process is running the balance sheet lessee accounting journals UBE, which creates the monthly journal entries based on the amortization schedules for each lease, which is the PDF output shown on this slide. Because an operating lease was used in this example, the AAIs for the operating lease are shown on the bottom of the screen. If you go back and look at the amortization schedule screenshot earlier in the presentation, you can see exactly where these amounts come from. This is where the time saving comes in when using the J.D. Edwards solution. One UBE can be run to create the journal entries for all active leases. The UBE can even be put on a scheduler so the journal entries are created automatically. Then the UX1 page can be used to monitor for any exceptions that seem out of place, like journal entries past due or the lease end date coming up soon. Here are some commonly asked questions about the balance sheet lessee accounting enhancement. 3 modules are used for this process, but you will only need a financials license. The real estate module allows for limited use to complete the tasks shown here without the need to purchase the real estate license. This enhancement is available for application in tools release 9.1 and above. And last, the level of effort to implement will depend on the number of assets and leases, but the time range should be around 4 to 6 weeks.
For more information on how GuideWire Systems Integrator can help your organization implement the new J.D. Edwards balance sheet lessee accounting capabilities to meet the current accounting standards, please contact Shannon Kaczynski or Michael McDermott at the information listed here, or visit us at GuidewireSI.com.